The graphics of candlestick analysis make it much more clear what type of patterns are setting up. For example, in the Dow, there was a resistance level here at the 50-day moving average. We had a nice up move. Then we had a bearish harami with stochastics up in the overbought area. The only criteria that wasn't confirmed was a close below the T-line. Yesterday's trading showed they was selling off pretty good. The only way to stay long in a lot of positions was if the indexes closed back up above the T-line, which they did. Knowing that they haven't closed below the T-line and doing a nice big hammer signal made it very clear that if the market opened positive again today, we wanted to be buying immediately, because if they were trading positive toward the 50-day moving average, it was setting up for a potential bobble pattern. And a bobble pattern is when it hits a resistance level, or price hits a resistance level, pulls back but can't close below the T-line. If it comes up through the resistance level a second time, that's the bobble pattern. That makes for a very strong indication that the next resistance level is going to be the next major moving average. So this would imply that any profits that were taken yesterday and then bought back, or positions bought back, that we still had more upside, which now potentially is up to the 200-day moving average. And knowing which sectors were acting the strongest could still be seen in patterns that were being formed in individual commodities like gold. Gold had done a big fry pan bottom and now in the process of doing a J-hook pattern. If this breaks out to the upside, gold prices are going to go much higher. And with that analysis, we can see what type of patterns are occurring in individual stocks or ETFs. This is Nugget, the three leveraged gold index for the mining companies. Also doing a J-hook pattern right off the T-line above the 50. If prices keep moving higher in the gold sector, this would be wave 1. Wave 3 would take this stock price all the way up into the mid-80s. So knowing what the general market is doing and which sectors are acting the strongest continually puts the candlestick investor in the right position at the right time. Also, knowing what each individual signal and pattern represents allows for much more in-depth analysis of what a trend is going to be doing. For example, on Deckers, when we had this big belt hold signal, this is a candlestick reversal signal or a continuation pattern in this case, where the profit taking's over. What a belt hold signal represents is there was lots of sellers, but the bulls sopped them all up to the point where they brought it back up into the trading range. Now there's no sellers in front, making the next trend very strong because there's no sellers in the way anymore. Having these type of insights based upon what human nature does time after time just allows a candlestick investor to make much more accurate assessments as to what a price trend is going to do. That'll be it. We'll see you in the chat rooms.